Dear students, we are in Kundu sir account classes, online classes. This lesson is particularly for class 12. It is class number 14 related to class 12. It may be for CBSE or ICSE or state board also. Today's topic is issue of shares under purchase consideration. That means any company is purchasing different machine or plant or asset from some vendor or the seller, then what will be the standard entry? As and when the company is purchasing asset, entry will be assets account debit, or it may be 2-3 assets, then various asset, that means maybe plant or machinery or others account debit to vendor account. That means suppose we are purchasing of a machine of 25 lakhs, the asset account will be debited by 25 lakhs and vendor's account is to be credited by 25 lakhs. But we want to issue some share or other than cash also, we can give them to cash or shares. In this standard journal is given, when we are giving other than cash, we are issuing share that company, then vendor account will be debited to the extent in the entry 1 it is already credited, and by that amount is to be debited in the second entry, and equity share capital to security premium reserve account if shares are given of that company at premium. Then vendor account debit to equity share capital account to security premium reserve account when the shares are issued against the purchase consideration, that is to vendor, the company is issuing share at a premium. Then vendor account will be debited and equity share account is to be credited and security premium account is to be credited. In case of premium, then the company who is purchasing the machine or other asset from the vendor account to this with respect to entry number 1 by the same amount is to be debited, and when we discount the discount on issue of shares account debited to equity share capital account. This standard entry is applicable for issued at discount, that means shares is given to the vendor at discount price. At discount price, that means vendor is getting more share as compared to if it is issued at par. In case of this, that means at security premium we are taking or considering for the issuing share, at that time the number of share will be less than the if it is sell at the normal price. Then in the security premium method, this number of shares will be less than the number if we issue the share at face value. In case the vendor will get more share if we compare at the face value, then because we are issuing the share at discount prices, that it is the premium price, it is the discount price. Now we are coming problem on purchase consideration. Saros Company Limited purchased a machine of rupees 2,30,000 from Blue Star Company, and payment made by Blue Star Company for rupees 2,30,000, and the company is paying cash 20,000, and the rest part, that is 2,10,000, that is 2,30,000 minus 20,000 you are giving cash, that means the rest purchase consideration is to be paid or settled by issuing share from this company, and the face value of the share is 20 rupees, and the company is issuing this share at a 21 rupees per share, that is at a premium. For the premium, this entry and this entry we have to consider. So it is clear the company is purchasing Sarosh Company Limited from Blue Star Company a machine of rupees 2,30,000 at the time of purchasing. The company giving 20,000 cash to Blue Star Company, and the rest part of the persons considered will be settled by issuing the share of this company, that is of Sarosh Company Limited, of face value 20, but this company issuing the shares at a premium, that is 20 plus 1, it is 21 rupees per share. That means 20 rupees plus 1 rupees equal to 21 rupees per share. Now we will pass the journal entry this. Now we will pass first journal, first to purchase the machine. So machinery account is to be debited by 2,30,000 to Messrs Blue Star Limited. Blue Star, what is this? Blue Star Limited. We are crediting by rupees 2,30,000. It is the entry 1. The entry 2, the company is making payment 20,000. So Blue Star Commercials, Blue Star Limited is getting 20,000 and company paying cash. So it is to be credited to bank account or cash account 20,000. That is, it is the first entry, it is the second entry. It is the first entry, it is the second entry. That means we have to pay more. That means Sarosh Limited will pay more, 1,10,000, and for which the company is issuing share at a rupees. Now we are calculating number of shares. Amount due as purchase consideration, it is equal to 2,10,000. 2,10,000 divided by 21. 20 plus 1 share price rupees, 20 rupees plus 1 rupee equal to rupees 21 per share, but face value rupees 20 per share. They are issuing, that is, it is divided by 20, so that is equal to, company is issuing 1,000 share, 10,000 divided by 21. How much share we have to issue? 2,10,000 divided by 21, that is 10,000 share is to be issued to the company. Number of share equal to 10,000 number share is to be issued. So what will be the entry for this? That means this company is getting how much share? That means we are issuing share to Blue Star Company. Then Blue Star Company, that means Blue Star Limited. Blue Star Limited will be debited to equity share capital account, equity share capital account and security premium reserve account. How much share we are issuing? That means the Blue Star company is issuing, that is rupees 20. So it will be, or it is to be, that is equal to 2 into 20, 2 lakhs. And premium 10,000 share of rupees 1 is. Then company share premium account they are transferring, and they are paying off the rest purchase consideration, that is 2,30,000 minus 20,000, that is 2,10,000 the company is paying as a to discharge of the value of the machine which is not yet paid, that is 2,10,000, for which the company is issuing 10,000 share of rupees 20 is, and 10,000 share on which premium is charged, that is 11,000, that is 1,000, that is 2,10,000. That means this is share issued to the company at a premium, that is first entry machinery account debit to Blue Star, then Blue Star company debit to cash because the company is paying cash, and the rest portion 2,30,000 minus 20, 2,10,000, it is share is issued of rupees 20 at rupees 21. So number of share equal to amount due 2,10,000 divided by number of share, that is per share price, that is company is issuing 10,000 share issuing, that is 10,000 into face value equal to, and 10,000 into premium equal to this, that is amount is paid or the due amount against the machine or the purchase price of the machine is paid up 20,000 by cash, or that is bank, and rest portion issuing 10,000 equity share of rupees 10 is at a premium. Just after this class I will take 5 to 10 minutes to write down in the board and another problem, and shortly I will discuss another problem on the same topics, issue of share on purchase consideration including cash or other than cash. That means there must be involvement of shares. Thanks all of you. Please wait, within few minutes I will start the next class. Dear students, it is the second problem today, that is problem 2. Against purchase consideration, share will be issued by the company. Now KP Limited formed with authorized capital of capital of rupees 25,000 equity shares of rupees 10 is, that is face value of the share equal to 10 rupees per share, and there is no question for premium, and they are utilizing this share for purchasing a business, of Mr. Vishnu for rupees 2 lakh. That is purchase consideration, that means asset minus liability equal to this, and I am again remembering to all of you, the net purchase consideration is 2 lakhs, and if we give the company or to Mr. Vishnu rupees 2,25,000 against purchase consideration, then means net asset value is to be compensated by issuing share. When the value of the share is more than the net asset value, asset minus liabilities, then it will be considered as a goodwill. And if the company is paying less than the net asset value, that is purchase minus asset minus liability, then it will be treated as capital reserve. If the company is paying more, it is for goodwill, or it is paying less and company is earning something for this purchasing of a business from Mr. Vishnu, then it will go to capital reserve. So, it will be calculated later on. The asset of the plant and machinery 1,50,000, sundry debtor 25,000 and bad debt 2,500 reserve. So, we can't say here you will debit this minus this 22,000, but not, it is not the system. In the accounts it is the system. Maximum disclosure is to be given, because it is sundry debtor is this, it may be bad or may not be bad, so it is be disclosed in the accounts. Even though it is liability, we should not compensate this minus this or set up. And furniture company is getting 12,500 and the stock is 30,000 and sundry creditors is 20,000. That company is getting this and also taking liabilities of rupees sundry creditor 20,000. Now we are seeing journal. In this journal book, that is first entry, the KP Limited, in the books of KP Limited is getting what? Company is getting, this is machinery of rupees, machinery account will be debited or is to be debited by rupees, how much? Machinery they are getting, company getting 1,50,000. We are writing here 1,50,000, it is machinery. Next, after machinery, sundry debtor. Sundry debtor account to be debited by rupees 25,000, and the to provision, it is written as reserve for bad debt. Reserve for bad debt. Reserve for bad debt is 2,500. 2,500. Now, 2,500 this part, and now furniture. Then furniture account to be debited by rupees 12,500. 12,500. And thereafter, any asset of stock, there is a stock. What stock account to be debited? How much? 30,000. It is 30,000. Now, we are giving share to the company, that is 25,000 equity share, that means 2.5 lakh, but they are giving 2 lakh to Mr. Vishnu. Then we can write here to Vishnu, thereafter we will take then to Vishnu. To Vishnu account, the companies want to giving credit for 2 lakh. Creditor, sundry creditor, how much it is? Sundry creditors 20,000. That means it is the purchase consideration for Vishnu, and net purchase consideration we are adding the assets. asset 1,50,000, 25,000, 12,500 and 30,000 is the asset. But we are that means you take the net effect this minus this. That means Vishnu is entitled to get 1,95,000. How much will get? Vishnu will get 1,95,000. But we are giving 2 lakh. This minus this 1,95,000 is given, is to be given. But we are giving 2 lakh. That means this minus this is 5,000 more. We are giving to Vishnu. What? For the reputation of that business. If we give more, it will be considered as goodwill. If we give less, it is the benefit for the company as a capital reserve. I have given the fundamental entries in 2-3 days back regarding the capital reserve and goodwill also. So you should write here goodwill account debit, then 5,000, then if you total, that is equal to 2,22,500. It is also 2,22,500. That is, we are giving purchase consideration, net purchase compensating. We are giving 2 lakh rupees shares to Vishnu instead of 1,95,000, because this minus this, Vishnu is entitled to get 1,95,000 in the form of equity share, but we are giving the 2 lakh. That is the difference is to be considered as a goodwill. If it is less, it is less, and it is more, it will be goodwill, or it is more, it is less, then it is to be capital reserve. But this problem is related to creation of the goodwill for the difference of purchase consideration, net purchase consideration, and the payoff amount difference is 5,000, that is equal to goodwill. So now I am concluding the class, and the next class I will give more problem on issue, one problem for pro rata and 2 problem on reissue of share after forfeiture. Thanks all of you. Please go through the class note and try to understand more and more.